Hey everybody, Rich Monroe here with BNB Investing Group for our weekly Thursday meeting. Thank you everybody for jumping on. Today I've got my good friend Brock here from Shorehorn Stays that's going to tell us about some exciting things that they are currently working on that kind of helps investors find and locate properties, which is something that we're all kind of involved with. And so BNB Investing Group is a new group that helps investors kind of scale their short-term rental business. And we look at the three different strategies, whether you are doing rental arbitrage or if you're doing management for properties or if you're buying distressed or fixing up properties to do short-term rentals with. And so I think Brock and his team do a combination of all of those things. And so it'll be interesting to kind of hear his story. So Brock, thanks so much for jumping on with us today.
Great. Thanks for the invite.
All right, cool. So if you want to start out and kind of let us know a little bit about the company and kind of when you guys got started, and we'll go from there.
Great. You bet. So we have sort of different divisions of our investment company. We have R2 Capital Partners, which sort of buys and holds and owns the properties. Shorehorn Stays, which is our short-term rental manager operating company. And then you mentioned our most recent is STR Finder, which is a sort of program to help people find new short-term rental investment properties. So Spencer is my partner. Spencer is actually looking at a property right now up in northern Canada that we're looking to acquire. So he couldn't be here today, but I'm happy to have the chance to get the word out about STR Finder and see if it can help some people find some good investments.
All right, sounds good. So let's take a step back a little bit. You guys started in 2019, which was perfect timing right before COVID.
Yes. Yeah.
So
hard to
tell
say.
us a little bit.
Yeah, it's hard to say when the right timing is to start because we actually raised some money from some private equity investors to do rental arbitrage. And we have both the Canadian arm as well as the US arm. And we had launched the Canadian. The US took a few more months to get going just because of the structure and legal advice and accounting things that we had to look into. And so the Canadian side got off to a good start, and we had 35 or 40 units pretty quick. And then COVID came. And so we rolled the US side out much slower. We did get 18 units or so in Philly, and then we used the US side was less rental arbitrage, and we'd buy the properties and then we'd manage them. Shorehorn Stays would manage them for the investment arm. So more rental arbitrage on the Canadian side, more sort of management role on the US side. But definitely COVID, when it came, it went from expansion to just, let's sort of batten down the hatches and make sure that this is all viable and working. And then, thankfully here we are a few years later and still alive and excited about some of the future opportunities as well.
All right, and so you guys are strategically kind of located in a lot of different regions, including Canada and in the States. And so how many units are you still doing short-term rentals with now? I know you've got an expansive real estate business that does other things.
Yeah.
But on the short-term rental side, how many units are you guys currently managing?
Short-term rental side, we've got about between 70 and 75, with 50 of those in Canada and 20 in the US, thereabouts. We have 3 properties in actually in Alabama that we've purchased just recently, and we don't have them up and running yet. So they'll be up hopefully within a month or so. And on the US side, we have one in Palm Springs or in Indio, and then we've got South Bend, Indiana. In Alabama, we're in Northport and Mobile and Birmingham. And then we have some in Atlanta as well. And we actually recently just sold one in Norfolk, Virginia, which was a great property and we loved it. But we did have challenges getting the permits that we thought were going to be easier than they were. So it's a great market if you can get in there, but one loud neighbor away from the investment not being as good as it would have been. The numbers would have been fantastic. It was great. It was just political around getting the license. So yeah. So anyways, so long answer: 70 units, 50 in Canada, 20 in the U.S., and 5 provinces in Canada, 4 states in the U.S. We have worked hard at our systems and operations so that we can kind of parachute into any market and deliver a consistent level of management and experience for our guests, especially in the secondary and tertiary markets that are less competitive, like Alabama and many of them in Canada as well.
Okay, and so are you strategically going into areas that tend to have better occupancy or better EDRs, or is there some other strategy around kind of what regions you typically go into?
Sure. So we start our investment and location based on kind of just good fundamentals for a real estate investment, not focusing as much on short-term rentals. So the capital that we've raised and that we're replacing and buying the properties right now are for institutional investors. And when they look at it, they want to know that the worst case scenario would be if short-term rentals were disallowed or the market just got saturated or whatever it may be. Do you have a plan B? And so for us, we need to see a rental market that in a traditional manner could be rented out to a long-term tenant, and it would still cash flow, and we'd still be able to have long-term, the asset. Because that's really what the investors are buying, is they want to buy the operations of short-term rentals is great, and of course increased cash flow is never a bad thing, but they want to know, especially for Canadian investors, they're looking for a place to park their money and know that it's safe, and whatever happens, they've got this physical asset somewhere down in the USA. So we start by finding good investments from that standpoint, good valuations, affordability, areas where the GDP is strong, population is growing, vacancy is lower, all on the long-term rental side. And then we look and go, okay, now that we've got these areas that we want to go into, what are the short-term rental dynamics of this area? Is it favorable to regulations? And then we're looking at typically, we want to see less than a 5 GRM, but probably a 3 or 4. So the gross revenue margin would be, let's say if it was a 4, it's a quarter. If we're buying a house for $200,000, we need $50,000 in revenue. If we're buying it for $400,000, we need to see $100,000 in annual revenue. And a lot of those numbers, there's, as you guys would know, different ways that you can get projections on the revenue. AirDNA is an excellent one. But we do make some obviously adjustments based on what we think our performance in the area would be, which typically we will go with the same or maybe slightly higher average nightly rates, but we do assume that we can increase the occupancy by 10-15%. And whether that's through dynamic pricing or just being more involved, we're competing against mom and pops. So sometimes just that extra involvement and treating it like a business than a hobby or a lifestyle sort of house that you run on the side. We have been able to increase our occupancy more than others, but we do keep the rates pretty much on par, even though, we feel we have a superior product and it's really fit up to give a great experience to guests coming and experiencing Airbnb.
Okay, very cool. And are you guys set up to manage remotely? Do you have boots on the ground teams, or how does that work?
Sure. So we've got both. So in every city we will have cleaners on the ground, and we will have a handyman or a handywoman team, etc. And depending how many units are in the city, we like to have redundancy. So there's multiple managers, cleaners, handymen, etc. So we always have a backup. But we do try and keep that as minimal as possible. And then we have a team of virtual assistants in the Philippines, which coincidentally, that was something that was helped out through COVID because Airbnb had laid off and shut down a call center. And we were able to find some previous employees that had like 3 years experience working with Airbnb, knew all their processes. And then once you hire one or two of them, they have friends that worked there. And so the whole team basically came experienced in short-term rentals from the Airbnb side. And they know how resolutions work and just everything they can and can't say and so forth. So it's a combination between virtual assistants in the Philippines, as well as some on the ground boots on the ground in every location. But definitely having the sort of the main part of it centralized between us and Canada and the Philippines has enabled it so that we can, if we find a good investment, we can really parachute in, even if it's 1 or 2 properties in a certain location. We can get the level of property management where we want it to be. So we think that's one of our biggest value adds, is that once you have that management system down, you're able to, if you see a good investment, you can move on it, and you're not just restricted to one city or town or area, et cetera.
And I think it's cool that you guys have the diversity with Canadian properties as well as U.S. Did you guys also see, like we experienced here in the States with kind of a dip in occupancy, 10, 12 months back, than usual? Is that something you guys experienced as well across the board on your portfolio, or?
So Canada was a little bit delayed from the US because we stayed closed longer after COVID. So we found our US really spiked and did very well. Early, and then more recently in the last maybe 6 months or 9 months ago, sort of coming into the fall winter, there was a slowdown on the US side, but Canada was still okay. We're kind of expecting that in Canada this next fall, because everything has sort of been 9 to 12 months behind in Canada, whatever happens in the US, which is actually kind of interesting because you can strategize around it, because it's almost like a leading indicator. Whatever happens in the US will happen in Canada, but you have time to react because you see what happens in the US and you can prepare for it on the Canadian side. Definitely the investment dynamics and just how everything runs, from regulations and financing, is preferable in the US. It's a much better market to operate in than Canada. There's only a few cities in Canada that do comparable. That would be like Victoria in BC and Halifax out in Nova Scotia, and much more seasonal. The winters are fantastic, or pardon me, the summers are fantastic and the winters are a desert. And so you really have to plan accordingly for that as well. Whereas, markets like Atlanta are much more consistent throughout the year and a lot easier to operate in.
Definitely. So what are the plans going forward? Your growth plans with adding more units? Are there certain regions that you're kind of aggressively going after over others, or what's the thought process going forward?
Excellent. Yeah. So this is where Spencer, my partner, who has the technical know-how, has been just immensely valuable in being able to find the properties for us. My background is 16 years at a bank in Canada, and so I'm more on the financing and the numbers and capital raising and so forth. But we were able to sort of, it's almost like reverse engineering from what the banks would need to finance it, and then what the investors would need to invest, and then going, okay, once we know we have the bank and the investors, where are the properties that we could go to and run them as short-term rentals to get increased cash flow? So he's developed a program that basically scrapes information from across the internet, gathers it all up, matches all of our criteria, and then as new properties come onto the market through Zillow and Redfin, et cetera, it actually runs the program on all of them. And so most of them don't meet the criteria that we have. So it's like a funnel. It kind of just brings it down into maybe 5% or less of the properties that would qualify. And we can actually go through our virtual assistants in the Philippines, know what we're going, sort of get rid of some of the properties will show up in the search just because maybe it's a really nice neighborhood, but the house has been trashed and is, there's been a fire or something like that. And it'll show up as an incredible opportunity, but that's because you'd have to invest 200 grand to get it back operational before. So our virtual assistants kind of go separate the ones that are obviously not good, and then we're left with the ones that we say it's art and science. So the first part is the science of us narrowing down the search, saving time, getting that sort of final group of properties to look at. But then there's still an art, and we look at are the properties in an area where their neighbors are far apart, or are there trees that are around it? Is it going to be easy to manage? Can we add any amenities to it and so forth? So the last part, we use STR Finder to really identify us where the properties are going to be and save us a whole bunch of time, so we can just get down to the ones that have high likelihood of being great properties. But then there's still a human element that you got to go in and use some judgment and see what works. But the interesting trend that we've seen in the last, I'd say, 2 to 4 months, is that we used to be getting a lot of properties in the south and the southeast, the Sun Belt of the US, and we are starting to see more and more in the Midwest, in even St. Louis and Omaha and Des Moines. And so we've seen the Nebraskas and the Iowas pop up, where before we were getting mostly just the southern, and now we're getting both. I'd actually argue the upper Midwest is probably showing us more properties now, or better returns on properties than the ones in the south that, for the last several years have been kind of the hot areas to go into.
All right. And so just so that everybody's clear, STR Finder is a platform that you guys kind of built internally and has been working well for, your acquisition strategy and looking for opportunities. Is it for single family only, or are you looking at multifamily as well?
It's so strfinder.co is for single families. We can use it for multifamilies. The problem is there's such a wide variety that the scanning kind of doesn't work, because we set the parameters for the investment. Like, we need to see the revenue be at least 20 to 25% of the purchase price. We need the average rent to be enough to carry the cash flow as a normal traditional rental. If it's a commercial multifamily, it gets very difficult to get all those numbers scanned automatically. So typically it's for single families. And the other thing is, actually, it was interesting when we went on, call it our roadshow to raise funds from investor, the feedback that we got was that they felt more comfortable in single families for several reasons. One, everybody needs a home, and it is the most liquid type of real estate that's out there. So multifamily, typically you have decent liquidity, but it's still mostly investors and institutional investors. So if, for example, interest rates go high and they don't qualify and cap rates are changing, you don't have an out. With a single family home, in that worst case scenario, there's still always someone who is selling it because it's an estate sale or a divorce or a new job. There's still movement and liquidity. So they were attracted to single family homes and said they preferred that over the multifamilies. Plus, when you look at it from the accounting standpoint and the investment standpoint, the land is appreciating and the building is depreciating. And from the institutionalized, they want more of the land appreciating and less of the buildings depreciating. So the buildings are really thought of as sort of a mechanism to make the debt payments and cover the cash flow. But the true investment, what they wanted, is as much land as possible. So rather than having 30 units on one building, give us 30 lots of land that can appreciate over time and the potential from that increased land. So originally we were actually trying to make it for multifamily. And then based on the feedback from the investors, they said, no, we'd rather you just go out and buy a whole bunch family homes, and let's just build that as a portfolio, as long as you can cash flow. Where you get in trouble is if you're buying a single family home and it's a luxurious, I mean, it's just a different strategy. You're buying a luxurious $1 million home and it doesn't cash flow, and if for some reason you can't operate it as a short-term rental, what do you do then, right? And what's your option? So that's kind of they said keep it with single family homes, but make sure that we've got lots of options for how we want to run this in case something changes short-term rental wise.
Yeah, no, that's a very interesting concept. So I work here in Georgia with an investor that's strategically looking for not only single family homes, but typically single family homes that need rehabbing that are on 15 plus acres. So 15, 20, 30 acres. And strategically we'll go in and rehab the property, put it on short-term rentals, make that revenue for 5 years or so, and then ultimately you've got the ability to segue into subdividing and putting in a subdivision. And so there's a lot of investors out there that kind of have very specific criteria on the long-term goal, and definitely the land play is something that's very lucrative and very interesting in combination with the short-term rental model as well.
Yeah. And what's interesting is even if you have no intention, because I'm a banker for my background, so I have zero intention of developing and doing any of that stuff, but someone who's buying it as my exit, that's an option. It opens it up so that someone else might be interested and have more options on how they could increase the value. And maybe it's just turning it into a duplex or a fourplex. It doesn't have to be a huge development, but they do have more options, and more options means more buyers, and more buyers means a better price on the exit. So, we're happy to buy single family homes in the US all day long.
Okay. And so SDR Finder not only helps you guys with acquisitions, you also are looking at rental arbitrage or master lease opportunities with it as well, correct?
Absolutely. So the interesting thing on it, you can use it for either or. And so what I've talked about so far from the investors, we're buying, but there are areas that are just better for rental arbitrage. So we do have a property in Indio or Palm Springs, and the asset levels of the houses out there are obviously much higher. It's 600,000, 700,000 for a house that in Atlanta would be 400,000, right? But they'll do 100 to 125,000 in revenue, and the rent per month is $4,000, right? So in those areas, depending on which one you're looking for, you actually can just go and see there's two different analyses that we run, and one is based on owning the property and the other is on rental arbitrage. And we've used all the numbers from our experience of managing properties for the last 4 years in both countries. So we have preset for management and maintenance and cleaning and landscaping and all of our expenses of actually operating it based on real numbers, not just, think it might be, but us going through our properties and going, yes, this is what it costs us to operate these houses. And then once we have those plugged in, it's really easy to identify which ones work. And definitely there's probably, I think rental arbitrage in California, Palm Springs area is one of the most attractive that I've seen. And then we'd still rather own in places where it's cheaper to own. We'd still rather own. So we are still buying in Alabama and South Bend, and probably more in the Midwest for Nebraska, etc. But in other areas, rental arbitrage all day long.
Okay.
And nice to have both.
And then so on the logistics of that, are you technically qualifying the numbers first, and then part of your team tries to explore if it's got viability for rental arbitrage? Because not all the time is the landlord or owner going to allow that. And so what's the order of events there to kind of qualify? Yes, the numbers might make sense. However, is the landlord slash owner open to that model?
Sure. I'd even back it up. Oh, sorry, I didn't mean to interrupt, Rich.
No, you're fine.
Yep. So I'd back it up probably one more step as well, because even before you get to the owner, you need the regulations in the community and the city, right? And so the HOA and the city or state, and basically what you have, we have it's on STR Finder, a list of all the cities in the country, are the most extensive list that we can put together for where they have favorable regulations that allow for short-term rentals and arbitrage. So that's kind of the first step, is just making, oh, I lost you there. Making sure that we're in an area that it's favorable. Then once we're in that area, there is a bit of groundwork that has to be done. But what we found is that in areas that it is okay, we put regulations in 3 different areas. One is there's just no regulations and it's the Wild West. 2 is they're banned, they're not allowed. And the 3 is that there's actually a robust set of mature regulations, and in those areas, people are more open to it because it has been established. So like Panama City Beach, and Indio, where they have Coachella and Stagecoach and all these concerts, and around there, the city Indio is for it. They have established their hotel occupancy tax, or transitory tax. They like the revenue. It's established. Everyone supports it. And in those areas, by the time we've gone through all of that and we go, okay, it's good with the city, the state, and the HOA, you're often in areas that, and all the numbers work, you're often in areas that the owners know it and they're open to it and they accept it because it's not a random thing they've never heard of before. So, you know, in those HOAs, it's actually been quite easy to convince owners to operate them as short-term rentals. Often they already have done it themselves. They just don't manage it. And, you know, they've had, you know, good and bad experiences, but there's lots of them that have rented out to normal long-term renters, and then they've had bad experiences. So they'd rather have short-term rentals. So, that's a long way of saying that the STR Finder does not go right down to the property owner, but it does assist in identifying cities and towns that are favorable, and from there in areas that are favorable with numbers that are favorable. And usually if you have all of those lined up, it's actually much easier to get units for rental arbitrage because it makes sense and it's already being done, and everyone's kind of on board.
Okay, very cool. So I just threw the website out on the comments below. So it's strfinder.co. And I'm excited to kind of start looking at this product. You know, all of us as investors are struggling to look for saving time when it comes to growing our business. Mm-hmm. And, you know, the fact that you guys have kind of got an engine here that's factoring a lot of the important things that need to be factored in, you know, is definitely a very interesting platform that we'd all like to kind of take a look at. And so, you know, I think you guys are just in the early stages of rolling this out, but it's going to be more of kind of a subscription-based service, right? Eventually.
Yeah. We've got there's different ones. There is a newsletter that's free, and it just identifies properties as they come up, but only a certain number per week. And then you can subscribe where you can do sort of an interactive map and look at different areas, or you can just pick a city and then be identified in that specific city. So depending what stage you're at in looking, if you're looking for trying to find the city that you want, then you'd probably want the interactive map, the premium version that gives you sort of the whole country, and you can narrow it down. Once you know where you're looking, you can kind of focus in. And I'd say, like you said, we're just rolling it out. So we would love feedback from everyone too. We are able to adjust it. And if there's a feature that you would find would be beneficial, you know, being able to reach out, we will try and to the website and make it as useful as possible for investors. And we think being investors in arbitrage and owning short-term rentals, that we've thought a lot of them, but I mean, everyone together, I think we can get a great product that will help us all succeed.
Okay, so how does it work right now if I wanted to sign up? Is it kind of a trial period to test it out first, and then it goes to a monthly subscription fee, or how does that work?
Yeah, I mean, the trial period, it's free for certain the basics, sort of to give you an idea of what it is. The newsletter is free. A lot of the information on the website you can get access to. So you'd be able to figure that out. And then from there, whatever is appropriate for you, it's $49 a month for the premium service, which basically gives you everything. And then it's 19 for the city specific. So I would assume for most people, the path would be, go to the website, check it out, play around a little bit. If they decide that they're, serious about investing and want to start, they might do premium for a couple months, and there's no cancellation. So once they've kind of figured out, okay, this is the city that I want to invest in, then they'd probably jump from the premium to the location specific, down to 19 a month. And then from there, they'd probably want to subscribe on an ongoing basis until they find the property or properties that they're looking for, because as they come up on Zillow, they will be loaded up into the system, and eventually you find the one that you want, and then at that point you could stop, and if you buy another property down the road, you could start again. So a lot of it, we kind of modeled after how AirDNA does the elements of the website to give you some information and let you know what it is for free. And then in AirDNA's case, we pay for the whole country to get access to all that information when we're looking for our properties. And then once we know what city it is, it's obviously a lot easier to just subscribe to that city and go down and look at that. So same kind of idea.
All right. No, it sounds very interesting, and I'm going to definitely start to dig into this myself, actually, for our business. We're looking for properties not only in Georgia but also in the Florida kind of West Coast, Tampa, Bradenton, St. Pete area, and so definitely we'll start kind of playing around with it and give you guys some feedback and let you know. What I'd love to have Spencer, perhaps we could schedule kind of a demo at
Yeah.
some point. It would be interesting to see. And we definitely, the folks in our group are, they're spending each week doing exactly what we're talking about here, and kind of shaking the trees and looking for opportunities. And so, I think we're all going to be happy to take a look at this product and kind of give you guys some feedback and let you know how it's going, for sure.
That would be great. Yeah. And Spencer is excellent at sort of explaining exactly how the technology works as well. So
very cool. So I know we're running out of time here. We're about to close it out, but I'd love to hear just kind of a brief summary of the other aspects of your business. I know you guys are in commercial. You guys are buying up shopping malls. You just had a deal that you recently are closing on. Would love to hear a little bit more about that as well.
Sure. Yeah. So what we found on the Canadian side, so we have about 200 rentals, like traditional multifamily in different provinces in Canada. And we found of operating as supply and demand is imbalanced in Canada, just like in the States. We've got lots of population growth through immigration, not enough houses being built. And rather than politicians focusing on building new homes, they're focusing more on who to blame that we're short and that prices are going up and rent is going up. So it's all very good from a investment fundamental standpoint, but we're finding there's pushback. They brought in vacancy tax and non-resident tax and Airbnb they're trying to push out, and if you own them in corporations and just in the media, there's sort of an evil landlord aspect of it. So we have decided to shift in the state or in Canada to more commercial. So we've bought retail shopping mall, industrial, and right now actually what Spencer's looking at, it's a 100-foot shopping mall in northern Canada, and it's about a 9.5 cap that we're buying it as, and the tenants are Walmart and Safeway and TD Bank and Tim Hortons, and so we've got banks and liquor stores from the province and so forth. So we've got the commercial side of things. And then we also have our residential. We're still going strong in the States. So in the States, it's still predominantly all single family houses, mostly also looking at, like I said, some in the Midwest and expanding up there. And we view the residential and single family homes as our bread and butter. Everyone always needs a place to live, and there's different ways we can manage it, but that's predominantly what we'd like to have, call it 75% of our portfolio. And then the other 25% is commercial. And so we've been doing more of those up in Canada. I've got to say, as doing both, I love the commercial from just dealing with tenants that are professional. And when you negotiate a lease, it's not emotional, and it's not a matter of, hey, you haven't paid your rent, we're kicking you out, and you and your children or little old grandma has to be out on the street. These are large multi-billion-dollar publicly traded corporations where they're being negotiated by employees who have to behave themselves and act rationally. It's much easier to make assumptions on how it's going to turn out than when you're doing some of the residential things. And especially through COVID, in Winnipeg, one of the places that I have a bunch of properties, I think I had 31 single family homes in Winnipeg when COVID started. And the province prevented moratorium on evictions, and 8 or 9 of the properties, the day that they heard someone for not paying rent, just quit paying rent. Not because they lost their job. They were actually getting government funding and stimulus through the CERB payment here, where they were getting paid $2,000 a month. And often there was 4 or 6 adults in the house, and they're all getting $2,000 a month. So nobody's working, nobody's paying rent, and
they're all going on staycations at our Airbnbs during that time.
Airbnbs,
right?
Exactly. And here they are, a political decision. I'm paying the mortgage, taxes, utilities, and everything for 9 out of 30 houses in one city. And that's a political move, and the other in New Brunswick, they brought in rent control, and it's just way more political, and it's difficult to invest when there's uncertainty from political issues. But what I found on the commercial side is people are much more supportive, and if you're able to negotiate, often it's a win-win. And what's the way that we're going to be able to get you to have more customers that come in, and it makes the building better, more attractive. Maybe it's an electric billboard out front, or better signage, or items like that to help the tenants. It's a win for them. They don't mind paying more. The community is more supportive, and nobody gets mad at you if you're able to negotiate a high rent from a evil billion-dollar corporation, right? If anything, they'll high five, right? So it's been an interesting thing. There's obviously risks with commercial vacancies. I mean, we're not planning on that being the majority of our portfolio. Like I said, 25%, maybe up to 50%, but then we'd probably sell some of the ones we had from earlier. The residential is more buy and hold. We want to buy them, hold them 30 years, operate, get cash flow, be consistent. The commercial, we're just looking for good entry points 5 years from now, something like that. But they do complement, and once you sort of cut your teeth on short-term rentals and single-family homes, it's easy to sort of graduate to a commercial property and use the skills that you've learned from the residential side on the commercial. Very easy to translate those skills. It's the same thing. And there's just room for more creativity and more interesting financing strategies as well, and raising from investors. So they work well together.
Yeah, no, I totally agree. We're actually looking at kind of a 440 unit complex that's had some issues with crime, and 59% occupancy. So we can immediately step in and get a lot of those units up and running. And so
yeah,
it's a natural fit for what we do. So it makes sense.
Yeah. I mean, multifamily in an area that the short-term rentals work is a great way to fill your vacancy. You find a building, if it has 20% vacancy, and short-term rentals are 1, allowed, and 2, economically viable, you can get rid of the vacancy in the first month, and it's gone. and then go back for financing and so forth. So there's definitely some great potential added values by sort of using strategies from both. So.
Yeah. Okay. Awesome. So listen, Brock, I really appreciate you taking the time today. It's been great catching up. Any chance that you guys are going to be back down in the Southeast anytime soon?
Probably. It's a good question. We have nothing planned right now. The building that Spencer's looking at closes middle of August. And so we're just going through due diligence and financing and so forth. So we'll probably stay and do some of that. But I'd say towards end of August, end of the summer, we're probably looking. We have a bunch of properties in Alabama that we would love to go see Alabama football game at least once a year. So we'll probably be out during football season. Roll Tide.
Awesome. Definitely. Yeah. Sounds good. Love to hang out with you guys when you come down. And thanks again. I appreciate you taking the time. And like I said, we'll definitely get you guys some feedback on the platform. I'm looking forward to digging into it and working with it with some of our students as well to kind of see, how the results go. And Perfect. So, yep. So once again, guys, BNB Investing Group, thanks so much for jumping on. If you're interested in hearing more about our educational programs, feel free to reach out to me directly, usually on Facebook Messenger, and we can schedule a time to chat and see if it's a good fit for you or not. But Brock, again, thanks, buddy. I really appreciate it. And tell Spencer I said hey, and we'll definitely try to get him on next time as well.
Will do.
All right.
Thanks a lot.
Thanks,
Rich.
buddy.
Yeah, bye.